Good evening, everyone. It's gone 8:30. Let's get underway. Good evening, everyone. I hope everyone can see the screen I'm sharing now. It says, welcome to BullCharts Remote User Group webinar. Please stand by. We're starting shortly. Well, we're starting now. I'm now showing the minutes, summary notes of last month's meeting, our June meeting. It was held 4 weeks ago. John Beattie showed us his approach, which was very useful. And there's some notes in the minutes there about that. The summary slides from that session are available as well. There's a link there, and a lot of notes about what John does in his sessions, the way he analyzes charts. And on the second page of the minutes document there's a screenshot showing the sorts of things that John does. Things like trend channels, some Elliott wave analysis, and also some Wyckoff studies. Amongst other things. And John's got his own indicator, his own version of MACD with some different parameters. All of that's in the notes there. We had a quick chat about VSA, volume spread analysis. I mentioned about BullCharts version 5. Tonight's agenda I'm showing now. Tonight the plan is to spend most of our time talking about Guppy's GMMA and CBL, and we'll get Phil to talk about that very, very shortly. So in the next few minutes, it'll take 30 or 40 minutes at least, depending on questions. What we'll do is we'll have a look at some hands-on use of GMMA, Guppy's multiple moving averages indicator, and the countback line in BullCharts charting software. This is a recording. We'll be putting it on the web later. And this is Phil's presentation to our user group webinar tonight. Now, today's topics include this. What I'm showing there are two major things. It's Guppy's GMMA. For those of you who are not familiar with that, there's a sample in the top right corner of the screen. Phil will explain all of that in detail and what those 12 indicator lines are. He'll also talk about the countback line. There's a snapshot of one way to use it in the lower right of that screen. So Phil's going to do that for us, and we'll switch across to him shortly. Here's the disclaimer. Please note, there's no advice here. It's for your education only. If you do make money using any of this stuff, please let us know. We would love to share in your winnings. If you don't, I'm sorry. During our dress rehearsals the last day or two, we've noticed that there can be a 5-second or up to 10-second delay between someone speaking and everyone hearing it.
I'm going to talk about Darryl Guppy's multiple moving averages and his countback lines tonight. My ideas have been adapted from Darryl Guppy's excellent book, Trend Trading. And I highly recommend reading any of his books and viewing his YouTubes as well. Very readable, and he's a very clear speaker, easy to listen to. I've given Robert all the coding for my adaptations for you if you want to use them. But you must also use other indicators to confirm. This is just a system I use, and of course there are lots of systems. So use your own favorite indicators to confirm any entries and exits you may want to use. Can you see the parameters of the?
Yes, we can.
Of the countback lines?
Yes, all good.
The first 6. Yeah, the first 6 blue ones are the fast moving averages that Guppy refers to as the traders. They can sort of turn on a 5-cent coin to any latest news and or indicators, whereas the red ones, there's a bit of a gap between 15 and 30. The red ones he regards as investors, possibly institutional investors, who may need sort of meetings to make decisions on whether to enter or not. I'll show you how I've related the different colors down on the line down here, ribbon down here, to critical moments the Guppy moving averages up here. I'll start with the dark green here. This represents the point where traders, the blue fast lines here, break through the slower red lines, who are the investors. And they've not only broken through, they're all in agreement. And very nicely. Nice time to be in the market until this point in time here, where the triggers begin to break rank. Could be some news item, some resistance point to hit or indicator, whatever it is, and decided that they want to get out. So you notice that the 3 EMA just starts to turn down slightly. The 5 still going up, all the others still going up. And then a few days later, more nervousness creeps in down here. And this is reflected in the light green bar down here. So it wants you to rest going on, or just remind what's going on in the actual Guppy model moving averages. So it comes down, more of the traders are unhappy, and they try to penetrate through the investor red lines down here, unsuccessfully. Carol Guppy says that when these lines here are quite nicely spread out, the investor lines, and they're all moving upwards, there's a lot of resistance with what's going on at the moment, and so the traders fail, and it all starts going up again. Everyone's going up, traders included, until it happens again. A little bit of nervousness, a bit more nervousness, and then we move on to food crunch time, as you all painfully remember perhaps. Here, nervousness creeps in a big way, and the light, very light pink lines here in the ribbon shows where the traders are actually beginning to penetrate. So can you see that? They're penetrating through the red investor lines, the slower lines, until we get to that point there on the 28th of February, where the very last one, very last has broken through the red lines. So it's seriously bearish now. Down it goes. All the red lines are going down. The investors are worried as well as the traders, until we come to this point here, where perhaps some of it we think it's on fire enough. They try to buy in again, but to no avail, because the investors up here say, no way, John, and down we go again. To here, 1 or 2 moments of slight confidence building in, and you get to this point here on the 24th of March. This is a pink, a proper pink line here. That's earlier on was very light pink. This is pink. I only have about 6 or 7 colors. And at this point, a bit of confidence is creeping in. Some of the traders are beginning to move upwards towards the red investor lines, but they failed. We all went down again. I think this is when we all thought at the time, surely it can't go any further than this, down, but it did. And down and down it went. 1 or 2 moments of confidence coming back in, and again, until we get to this point here. I really like this. This is very light green, I call it. This is the point where the traders are beginning to penetrate through the red line upwards this time. It's the opposite of what happened up here. So they're beginning to penetrate upwards. And again, once they've broken through, we're back to dark green again. Everything's moving up, the traders and the investors. And then a little bit of nervousness creeps, and again, and again, and again, and that state of play at the moment. We're all up, but everything seems to be narrowing a bit. We're not quite sure where we're going. But anyway, at the moment, the market's going up. This, of course, is the top 200, ASX 200, and overall, it's only an index. The individual shares sometimes behave a little bit differently, but it's a good indication of where the market is at the moment, might be going. I'll perhaps take some questions there. If we look at, this is sort of summarizes what I've been talking about so far.
Yes, don't forget our delay. Happy to pause for questions. Are there any questions on what we've covered so far? It's a little bit unfortunate about Phil's the interruptions there, small interruptions in his internet connection, but I think it's not too bad. We can put up with it. I can see David Woodside has got a question. David, go ahead.
I was about to type it in, but Phil, have you ever thought about using, I quite like Guppy's multiple moving averages, but if you put in a fill between 15 and 30, I think it really gives it a bit of highlights where it's going. In other words, a fill between the blue lines and the red lines. Have you ever thought about using that?
That's a good idea, yes. So somewhere what I do actually use the 26 EMA as well, which I use of course with a MACD. Yeah. So that would normally come here somewhere. But that's a good idea. I'll make a note of that. Yeah.
Very good, David. Thank you. Any other questions anywhere? We'll pause for a moment and allow people to type something into the chat box, even just say hi or something if you want to ask a question. Just to briefly recap for those who might have missed it, what Phil has just shown us is the standard Guppy multiple moving average indicator. That's 12 moving averages, EMAs, and the ribbon across the bottom is a custom ribbon indicator that Phil's created. As Phil said at the start of the presentation, he sent me a copy of it, so we're happy to share that with others later. That'll probably be up in our user space that we'll be sharing soon in Google Drive. So that's what we've sort of covered so far, and Phil's interpretation of exactly how what the GMMA tells us about the traders versus the investors. There's Claude has said, can this be applied on different time frames, weekly, monthly, etc.? My guess is it can be. Phil, do you use different time frames?
Yes, indeed, I do. The present weekly one, I won't do any change. It might mess up things up, but the present weekly one, it's very low. It's the countback lines that are the problem. That's why I don't look at the weekly. I rely on your Saturday morning newsletter to give me an idea of where the weekly trends are going. Mm-hmm. But I do use, I don't use the lines themselves, beg your pardon, on anything other than the daily ones. I use the countback lines later on, as you'll see, on even 1 and 2 minute charts. And they work quite well on the weekly charts as well. but I'm a day trader, so I just use the daily moving averages.
Very good, Phil. Thank you for the question, Claude. Phil, do you want to go on, please? Thank you.
Rightio, I'll move on to the next stage. So this by itself, the countback line, sorry, the moving averages, all very nice, give an idea of where the trends are, and I also use it to help me lighten my load a little bit when a little bit of nervousness creeps in. Those light green ribbons down below, I lighten my load a little bit by about 25%, so I'm not exposed to too much risk. But then you need to confirm with other indicators, which brings us to the countback lines, which I'm just about to show you. Daryl Guppy says the first thing you should do is draw your trend line. So draw the down trend line there, and notice another one there that was sort of false spreader. So first of all, down the trend line and use the countback lines to fine tune your entry. And this is how we create a countback line. You go bar on your left here, and that's the countback line there, the second one down. Grab it, place it on the lowest low here, and that line's the pivot low. That counts as bar number one. Then he suggests, well, not suggests, he tells you to go up to the next higher high, which is here, and then take up one more to here, and that's the high, and that becomes your countback line. If you look at the settings on this, you can see it's got 3 long. Okay, the 3 means the pivot low counts as number 1, 2, 3. The rationale for Guppy's countback line is that the high of the day is as far as the bulls have been prepared to pay. They're not going to pay any more than that. So that makes the high point of the day a very significant one. And similarly, you go back to the previous high day, that's as far as they would go there. And finally, the third one, so up 1, 2 countback lines, 3 including the pivot line, pivot point, that's your countback line there. If you chase this back up, you grab the asterisk here, and you can chase it back upwards, all the way up to where the decline started there, and you let it come down. You keep putting it on the lowest point, on the lowest point, on the lowest point. You can see that the system would never have allowed you to get back in while the debacle was going on. It comes down, and even this false trend break here, where it broke the trend line, the traders, remember, thought enough is enough, but the countback line says it's not. It hasn't broken through here, so down it goes further, all the way to here, and at this point, it's closed above. It's not good enough, Daryl Guppy says, to just get a high above. It's got to close above the countback line. And he suggested, I jump the gun a little bit sometimes. if I think it's going to close above, I use my crystal ball for this, I'll get in early here on that day. But Daryl actually says, wait till the next day and you get in on the open or best price you can possibly get the next day. Right, but the first thing you do when you get an entry point, and by the way, on this one, I would take that one. I'll tell you why later. The first thing you should do when you get a breakout of the countback line is immediately turn your long countback line tool, the BullCharts tool, click on its properties, and turn it into a short tool. And change the color to red. I like to change it to red, so I know where I'm going. And this way, you're going to create your stop loss. So that day we got through there, that's the day we penetrated that countback line, change it to a short CBL, put it on the high of that day, and that becomes your stop loss entry for your entry that day. And you get in the next day price, it never hit the stop loss, went up again, the next day hit. And I'll just bring that back down here. You have it already that these lines, these ribbons down here reflecting on the physical countback lines chart up here. And you can see you chase this stop loss all the way up. Each time there's a higher high, there's your new countback line. You will pack in here or here on the index. This is just the index. You keep chasing it up, and even on that high that day, the new countback line there, notice that the price went below countback, that this is now your loss. But it didn't close below it. It still closed above, so you're still in the running. And in fact, all the way up here, that's that higher high. That's actually a low high, so we don't get that. All the way up here, and we get to here. Oh, sorry. So there, that point there is when you penetrated down through the short CBL, which you remember is your stop loss. You've been trailing a stop loss all the way up here. And that is reflected here in the red ribbon there. Tells you to get out. And if you look here, I think you'd still be out of the market. On the index, remember the individual shares are a different kettle of fish. Let me see. I think that's it. So just get used to changing the parameters from short 3, long 3. You get in on the long 3 here at the bottom. And change the color so you know where you're going. Blue. So wait for the penetration and immediately set your stop loss and just keep trailing upwards until you're out of the market. I'll bring the two together in a minute, the Guppy multiple moving averages and the countback line. But perhaps we go to another screen here to see if there are any questions.
Phil, that is a good place to pause for questions because, Phil, we do have two. Jason has asked, so your ribbon that you're showing there on the bottom of that price chart, that ribbon, is it a combination of GMMA and the countback line, or exactly what makes up that ribbon?
No, it's purely the countback line. What I've done is moving on to the next phase, and I'll come back to Jason's point. to save you keep using the toolbar on the left to work out where the countback line is, both the breaking upwards and the stop loss line, I've invented this automatic countback line. But take care, because it actually operates off the highest high in 10 bars and the lowest low in 10 bars. Some people might want 5 bars or 3 bars. My ribbon down here reflects this 10 bar. So if we put the countback line on here again at the bottom, you can see that it perfectly matches the line I had. Because of course, this is the lowest low in 10. But I would recommend that you use the tool on the left just to confirm that what you're looking at is the lowest low in 10, which is what my automatic lines do. So a little bit conservative, but I'm quite happy. I'm waiting for a real plunge to see how traders are able to get out of this trough, here. Things must be pretty good if they can. If you only had like I've actuated like a 3 bar from the lowest low in 3 bars, and you're just taking a little bit more risk, but that's up to the individual. So these ribbons reflect what's happening up here. So there it goes there. It was above the countback line, this black line here, until it went below the red line there. And up again there on that moment. There's a reason why that does that. I won't go into it now. It's to do with my 10 bar parameters. I'd say I wouldn't have got in with that, and I'll show you why when we come back, when we put the both of them together.
Very good, Phil.
And so it follows it up there. That is the same as having a short countback line there. Yep, right. Okay, I'll stop there.
Thanks, Phil. Phil,
the question?
Yes, Phil, thank you. Thanks for that. We'll take one more question and then we'll let you get on. But the next question is from Dennis. And Dennis has asked, if you're using any of these tools, can you use the index as a possible overall market health indicator that itself behaves like a master switch to help you whether to be in or out of the market?
Yes, that's what I do. It just gives me a general feel of market sentiment, and just like if you look at the price of the All Ordinaries or any of the indices at any day, you get a feeling whether they're going up or down, and this helps to sort of put a figure on things, and helps me to. I'll be looking for that 6182 as a sort of resistance point. If it breaks through there, I'll be also looking at individual shares, which we're going to come across down here. I've got a few examples later on.
Very good. Thanks, Phil. We'll let you get on. I know there's a lot more material to go, so do you want to continue?
Yeah. So now I've put two together, the Guppy moving averages, GM there, and the countback lines. And this is how I like to use them. I'll just take that off there to be more space. Going back to where we started on the Guppy moving averages, you see this one represents the blue traders have moved through the red on his multiple moving average line, and simultaneously the price has moved above the countback line. Should have And I like moments like that. I like when they both coincide, the two lines. Any sort of improvement in the Guppy line, but there must be a move above the countback lines in the bottom. I don't want to mess things up. I shouldn't have taken those lines away. Never mind. And I'm in with sort of both feet at that point. I like a bit of oomph. I like the punters to be excited. They're getting in on all fronts, and so I will join them. Moving along the next day, if there's a little bit of hesitation, this time the hesitation is in the countback line, I'll take 25% profit or lighten the load a little bit. And I also, we're not going to get around to it today, but I 25% off, we get a nasty candlestick from there for the hanging man thing. So I take 25% off there, 20% to 50%. Next day, I'm in boots and all, another full parcel. And I peer up like this all the way till we get to here, where nervousness was creeping in. Here, remember it was on the countback line. Some of the blue fast movers, traders, were taking profit. And I will take profit. If nervousness creeps in, I'll just take 25% profit there. Another 25% there. And I'll probably also take 50% off there because that's a nasty candlestick. When it gets down to a red CBL, I'm out completely. And that was there. Again, here, took a little bit of profit all the way. So no red line until I got to here. Nervousness here at the top just before the big fall. So I was taking 25% there, possibly another 25% there because it's a nasty candlestick. That's 25% of a nasty candlestick, and it also showed nervousness on the multiple moving averages. So I would have been completely out for that day there. So it's a system that keeps you out of the market when things are going very, very badly. I said I like to get into the market. There's the next CBL breakthrough, the one we looked at earlier on. I don't like that because it's taken, I like color changes, and it changed there. This sort of took 1, 2, 3 bars to get there, so I don't like it. So I wouldn't take that. But that one, where there's a color change, an improvement, going from deep bearishness to confidence coming in on the, I should put the capitals will load quickly. You can see that now. The traders are beginning to break rank, a bit more confidence moving up, and it's crossed the countback line. So I'm in there, bit of profit there, bit of profit there, probably 30% profit, 50, 75% lightening of the load there, in again there. I do a lot of in out, but I've got quite a good deal with the broker, so it doesn't bother me too much. It's sort of, I would just regard it as insurance money, especially when you're a nice run like this, where you can pyramid up and up and up and up, and you can make a decent profit there, which easily makes up for some of the down here and here. So all the way to there. Another thing I like is I do like this very light green bar, ribbon rather. So I would be in there I like to see a color change with an improvement in the multiple moving averages, and you can see that improvement there. And it's also crossed the countback line here, so I'd be in again there. Following this up, and I get to there, bit of nervousness, nasty, stick there, and I would have taken a bit of profit. And by the time I got to here, red, I'd have to be out there, but hopefully I was there. So that's how I bring them both together. I say I like the moments, those critical moments, when they're both not there, when they both change colors. So that's more or less how I use them together. I've got some examples here of actual physical shares. So perhaps any questions so far?
Bill, I think there's no questions at this stage, so you might as well move on and show us some of the real shares. Thank you.
Okay, no worries here. So this is a Seek. I just trade in the top 100 or 200 at the max. I never do any specky stuff at all. I just like the liquidity of the top 50, top 100. So this is why I stick to those sort of companies. SEC, in there, countback, I should put the moving averages on there. You can see they're breaking through nicely, and also the countback line, it's broken to the countback line. So, well and truly there. Nasty candlestick there. I'd like my load. Another nasty one there, creeping in. The color deteriorating from green to light green. And again, keep lightening my load until I've got nothing left. If the final parcel I'm left with is less than $5,000, I get out. It's not worth holding on to for the brokerage. Again, here, double dark green in. I wait till it all comes good again. A bit of profit there, a bit of lightning there, in again, all the while pyramiding up if I can, unless I get nasty candlesticks like this, and I sold 25%. There, out there. It's gone to red on the CBL, definitely out. This one, I would possibly there. As I said, I like the very light green one. It means that the fast trader blue lines are penetrating the investors' lines, red lines, and it's very realistic. So if at the same time they also get a countback line break up, I'll take it until I get nervousness creeping in, 25%, 25%, out completely there on the red, beginning of the decline. Not in again. I didn't like this one here. It's taking too long. The CBL is up, but it's just taking too long to get there. I say I like them both to be simultaneous. So I'm in again there, light my load, in again there, the direct contrast there. That's optimistic compared with the bearish there, broken through the countback line, oh my God, there's another nice light green one there. I like that. I'll go in, even though they're not in sync. I'll go in if this is green and that's light green, and I'll also go in if this is dark green and that is dark green on that point there. And again, just follow it up until nervousness creeps in whatever form. Sorry, any question?
Des has asked, have you done any back testing with this sort of approach in any way? Have you done any back testing or considered how to do back testing?
Yes, I have. And it was it's very optimistic. But at the moment, so the backtesting program I use, TradeSim, is on my old computer, which has died. And the very next time I go down to Perth, I'm going to get myself a brand new super duper one and contacted and asked the chappie that I need a new version of TradeSim. But I have used this in some of my backtesting when TradeSim was up and running on my old computer, and it was quite optimistic.
Okay, Phil. Thank you for that. Kevin has asked, are you actually trading any of the indexes, the All Ords index? Are you trading them on CFDs or anything, or are you just using them for an indication of the market?
I'm just using them for indication. Yes, I use the physical shares.
Okay.
Don't like
too
much human shares.
Okay, and Dennis has said that it looks as though, if we're reading between the lines, looking at what you've been saying and analysing about the index, there are some times some dates when on the index was, and the indicators were saying don't trade at the moment, but have you still been trading some stocks during that period, or how do you handle those sorts of situations?
Yes, cautiously. You could, of course, go in with lower parcels if everyone, but so the individual stocks sometimes behave differently from the index. Like the energy sector might be well down when and vice versa, while the XGO is up. So you can do this, of course, on the individual indices to gauge the feeling where each one's going.
Yeah, we understand.
I'll just show you. Well, I won't go the whole process of BHP, but I got in here and it built up quite nicely, except I got very worried about these two candlesticks here, and I took a bit of profit. Then I noticed it was coming up to a resistance point here from a bit before the market collapsed. So I was getting very nervous about, was it that day? It was Monday. Was that Monday? Yes. On that day. So can use countback lines on minuscule time periods, such as this one here. BHP, this was Monday, using 2-minute times. And I was hoping to get out at 38.47 because I thought that comes up on my resistance indicator as a resistance point. But I thought, no, let it run past 38.47, and it did. And I was just doing one countback line. So from the high of there, that's the low, go to the next low there. Nope, doesn't get taken. Up again, a new high. That's the low there, doesn't get taken. So we got all the way up here to 64, I think it was in the end. And it penetrated well and truly into this resistance level. Do the countback line, and that there was actually 38.55. Wait till it penetrates, it goes down, so it's failed. And it's just amazing number of times, some sort of dead cat bounce, I suppose, that I put a sell on here. You can put a contingency order on if you wish. If it closes below 38.55, sell at 38.55, and lo and behold, it did, and I got out there. Not at the top, but not far off it. So you can use them on different time frames as well.
Phil, very, very good. There's one question that Des has asked that's closely related to that, and we might be getting towards the last couple of questions because of time. Des has asked, Phil, do you pretty much only use daily charts for your interpretation the way you've been showing us tonight, or would the same analysis work on weeklies?
It possibly would on weekly, but I'm actually so used to the daily rhythm of things that I prefer to day trade. I do take into account where the weekly indices are going. So I'll read your letter, Robert, on a Saturday morning, which gives me a good idea. But telling you how I say the daily rhythm, I try not to get in on during the first hour and a quarter. I call it the silly hour, where all sorts of weird things happen. And if something's got away from me, so it's got away from me, I try and get in on Fibonacci retracements that day. So that's something shot up. It's fulfilling all these criteria here, but it's going mad. So I will use the Fibonacci retracements down to 50%. If it's so 50% and it looks like it's staying there for the day, I won't touch it. I'll just let it so that there's plenty more fish in the sea. So that's why I say I'm sort of used to the daily rhythm of things. Whereas the weekly, I don't know whether when you get in Tuesday, Wednesday, Thursday, when these things are happening or not. I suppose you could combine the two. Everything's going well on the weekly, fine tune it on the daily. That's a possibility.
Phil,
a good idea.
Phil, thanks for that. I like that answer. Phil, you mentioned about the silly hour at the start of day. I've heard some of our A2AA guest speakers over the years talk about how the retail investors open the market and the serious professionals close it.
Yes.
And I think that basically concurs with what you're saying about some silly things happen in the first hour or so of the market. Phil, I'm looking at your script notes and wondering if there's any final closing comments you'd like to make, some other tips or things you watch, like lightning parcels or anything else about how you tackle the trading day.
Yes, I say another thing that we haven't got round to is I use an extreme rate of change to take some profit when things go a bit silly up here. I'll do that any time of the day, the first 5 minutes if I can see that's happening. But I say just a system that works for me. There are many others. And it needs tweaking. Perhaps a very good coder could work on my CBL ribbon to make it more flexible than my just 10-day low and 10-day high operating off. But I love tweaking and looking at other indicators as well, and that's the fun of technical analysis. But try what you're comfortable with and back test it and stick to it. And just one final comment. I noticed trader Nick Radge's, I subscribed to his newsletter, and he had to Google his YouTube that he did a couple of weeks ago about coin tossing analogy. That if you can create an edge for yourself, of course, coin tossing is 50-50, doesn't matter how many times you do it, but if you can create an edge for yourself, you will eventually certainly make money. So that's the idea of assembling the indicators to create a little bit of an edge advantage. All right, I'll just finish on that. Yeah.
Phil, very good. Thank you for that. We've gone past the hour. Phil, thanks for that. I think what we've seen there is that the countback line you found has been very useful to help give you an indication of setting an exit approach, basically a stop loss. And we should point out to everyone who's listening that the countback line is a useful tool that does have about 4 different ways you can use it. That's in the drop down when you have a look at the properties of the countback line. So that's worth exploring. Yeah. And you've demonstrated 2 of those tonight, so that was good. What I might do is I might go back to my screen. So bear with me just a minute. Phil, thank you very much for all of that. That's been really good.
You're welcome.
We'll just show the agenda again as we wrap up. And one last comment John's put into the chat box is, if watching daily charts, watch for any change of direction around 10:30, which often indicates direction for the rest of the day. John, that's a good tip from someone who watches the markets every day. So thanks for that. It's past 9:30.
I would agree with that, yes.
Very good. And the next meeting is scheduled for, this webinar will go ahead on the 4th Wednesday in August. So that's about 4 weeks from now. That'll be the 26th. All right, everyone. Thank you for your attention and interest. We'll call it there. Say good night and look forward to seeing you all next time. And Phil, thank you again for all of your effort. It's been really good. Good night, everyone.
You're very welcome. Yeah. Thank you. Good night.